Hey, welcome back to the Mining Pod. We got our news roundup for you today. We're going to go through Bitcoin and Bitcoin mining news after a quick word from our sponsors.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Okay, we're back on the phone here. Got Colin Harper, the editor-in-chief at Blockspace Media, and myself, lowly Will, joining on the mic. No Charlie today, no Matt today.
Another
just Colin and Will.
Colin Will duo jam.
Honestly, growing fond of these sessions. Okay, so most people listening to the show know the schedule. We're going to go through the difficulty update. And then we got a slate of different topics for Bitcoin and Bitcoin mining this week, including August miner updates from Colin. Colin did a great piece in the Mining Pod newsletter, which everyone should go subscribe to. So we'll go through the August miner updates. Then we're going to go move over to Japan and go talk about the Tokyo Electric Power Company mining Bitcoin. And we're going to go to Fractal Bitcoin, which is a piece from the Blockspace newsletter where Charlie kind of dug into a new meta protocol / merge mine chain that is catching a lot of attention this week. And then we'll finish up with a little BSV cry corner. Colin's coming in with more strong cry corners than we used to do. And this is frankly a pretty good
This
one.
is a BSV and alt history crossover cry corner. So you're not going to want to miss it, folks.
Yeah, stick around for the end. Okay, up to our difficulty update. We have a downward adjustment estimate of 8.82% expected in 13 days. Now, we're recording this 2 weeks away from the next difficulty adjustment. Is this number accurate or not, Colin?
Yeah,
we both
take
no.
take it with a huge grain of salt.
A lot of salt.
You usually
still got 2 weeks.
Yeah, you usually don't get a good sense for what the actual difficulty adjustment will be until a couple of days out. If hash rate doesn't change too much, a week out maybe, but
yep. And so, reminder for people listening to the show, how this sort of works is the Bitcoin network is trying to get towards that 10-minute block time, and so if blocks are coming too fast or too slow, then the network will adjust the difficulty by percentage to get it close to that 10-minute mark. And we're still way too early in this 2-week window to know. The last difficulty adjustment was upwards though by 3.58%. And that was just more pain for miners, all-time difficulty, all-time hash rate, all-time low hash price. This is the bear market of the bear markets for Bitcoin miners. They are looking for profits anywhere. They're cutting costs however they can. Colin, have you had any word from friends this week or seen anything that was interesting around bear market mining?
No, but I'm looking, not with regards to anyone speaking to me about it, but I would point out that I'm looking at hash rate indexes, new data page, which I recommend everyone check it out. It's pretty slick. But I'm looking at the 7-day average hash rate. As Will just pointed out, we hit a new all-time high for hash rate recently at 700 exahashes a second. Incredible, considering, like Will said, we're at all-time low hash price. But since then, we have dropped down on the 7-day to 657 exahashes a second. So I think you're starting to see even more miner capitulation. You're starting to see miners who are higher up the cost curve, higher up the efficiency curve, drop off the network because it's just getting brutal out there. So I would not be surprised if the next difficulty adjustment was negative, given the fact that we've seen that massive curtailment in hash rate over the last couple of days. So
I would agree. One thing came to mind when you're talking right there, and we actually didn't have it for the show, but there's a nice tweet from Steve Barber and then also our friends at Second Gate Advisory showing different machine spreads over different input costs. It showed that like most machines right now are mining in the red, regardless of what kind of machine you have. Like there's only a few models at a few select price points that are actually making money. So when you look at all these pubcos right now, their stock prices are down. Well, I mean, think of the underlying economics. For the most part, stocks in Bitcoin sort of trade with Bitcoin price. So that's a big catalyst. But right now, we can also look at Bitcoin mining economics and just know that They are not hot.
No, they are not. And
speaking of which, Colin,
yeah,
let's go through your August update.
Oh boy, I should have put hash costs in this, but I didn't. I think maybe because I didn't want to scare people. But this was the most recent newsletter from the Mining Pod newsletter. As Will said, if you haven't subscribed, please do. We're putting out unique analysis every week. And for this week, we looked at the August updates from some of the leading public Bitcoin miners. And the TLDR from this is we're still in this kind of limbo after the halving. All of these miners are trying to expand their hash rates as much as they can with next generation ASIC orders from last year. These are mainly S21 series and M60 series rigs. And hash rate is slowly growing for some of them. If you could scroll down here, Will, want to point out the first chart that we have in the update, which is the end of the month hash rate deployed from all of these miners. As you can see, very few added significant amount of hash rate, namely Marathon added a decent amount, and Iris Energy coming out of nowhere with a 52% increase to its hash rate. Now, I'm not shilling Iris, but you got to give it to them. That's a huge bump. And it also has ramifications for their fleet efficiency, as we cover later in the article. They're the first public Bitcoin miner to get a fleet under 20 joules per terahash. Huge feat there, honestly. So they've really just updated their fleet with all of the next generation machines that they ordered last year. And go up to the selling chart really quick, and then we'll go down to that. So, and this is the other takeaway, is that Bitcoin miners are selling like they're in a bear market right now. During the last bull market in 2020 and 2021, very few miners were selling, at least public miners were selling their mined production. Now, the majority of them, in fact, the super majority of them, are selling every month to make sure that they can cover costs, to make sure that they can build up their balance sheet with cash. Because as we saw last cycle, when the bear market hit, a lot of these miners were selling their Bitcoin for heavy discounts compared to when they mined them. So as you can see from this chart, every single miner except for Mara, Riot, and CleanSpark sold significant amounts of their supply. CleanSpark sold 2.5 Bitcoin last month. Riot and Mara did not. In fact, Mara increased its Bitcoin treasury by buying 100 million Bitcoin on the spot market, kind of pulling a micro strategy here. I don't believe they issued a note to do this. At least I didn't see in the press release. Maybe they did. They have plenty of cash to execute something like that too. Kind of a strange play, in my opinion. No other commodity producer just hoards the commodity that they produce, at least in no other industry. But Bitcoin miners have often been rewarded for this behavior because they've always been high beta, kind of proxy exposure plays to Bitcoin. So, and kind of for the last chart that you were going to scroll down to right there, yeah. Looking at efficiency and reported power costs, this gives you an idea of where a lot of the public miners are currently. If you look at this chart and you were to back out these numbers to look at their hash cost, and this is not including SG&A, which is important to include, you can kind of see why they're selling their Bitcoin. Margins are very thin right now. Even for the miners with some of the lowest power costs and best fleets, they are really scraping by on a lot of, basically on every metric. So I think that that's another reason why obviously you've seen AI and HPC plays become more and more prominent. That is where they're skating to where the puck's going with investor sentiment. And as we'll probably report more in the future, looking at the margins for those, they're really fat compared to Bitcoin mining right now. Now, if Bitcoin rips, obviously this changes, but it should be no shock to anyone why AI and HPC is on the tip of everyone's tongues currently.
Any other charts you want to pull up from that period?
No, I don't think so. It was kind of, business as usual. One thing that I'm looking forward to in later monthly updates is kind of more transparency. So Iris, and I believe it was either Iris and Bit Digital. Let me just double check really quickly because I have a note here at the end. Yes, Iris and Bit Digital gave revenue updates for their AI and HPC business arms. They don't need to do that in their monthly reports. That's really usually just included in 10Q revenues, revenue line items. I'm really excited to see that because if more miners do that, we can track in real time how their HPC and AI plays are developing. And the other thing I would say is there's not really too much you can glean from these August updates with regards to how healthy these companies are outside of how much Bitcoin they're mining and how much they're expanding their hash rate. Most of them are finally doing efficiency updates in their monthly updates, which I really appreciate. But really the important thing to remember is kind of going back to those thin mining margins. The question going forward is how can these miners monetize the megawatts they have under management? And these things don't really tell you that, outside of how much Bitcoin they're mining. I think that we're moving to a point with mining analysis where we're moving beyond just they mined X amount of Bitcoin and their hash rate increased X amount. That's great, but what are the actual revenue numbers from that? What is the gross profit margin? All of those things. So it's kind of final thoughts there.
Hash price hit a rock bottom at record lows of 0.00069 BTC per petahash per day, or around $39 per petahash per day. On the other side, over at NiceHash, pay rates are skyrocketing, practically hitting pre-halving levels once again. Right now, NiceHash is averaging 0.00140 BTC per petahash per day. That's about $80 per petahash per day. The delta in pay rates between NiceHash and leading FPPS pools is 110% in favor of NiceHash. Connecting to NiceHash is just as easy as joining any other mining pool. Head over to nicehash.com and be ahead of your competition. I love during a bear market where the numbers actually start mattering a little bit, right?
Yeah, exactly.
Okay, let's take a quick jet over to Japan and talk about this fun story from I'm going to butcher this, apologies, the Asahi Shimbun. I think that sounds kind of correct.
I don't know. All I know is acai beer. I don't know how these are related. I don't speak Japanese, but I assume.
Well, this is some sort of Japanese publication, but headline is TEPCO firm uses surplus green energy to mine Bitcoins. This was published on September 8th. They got a nice picture of what model is that? Is that
looks like a What's Miner.
A What's Miner. Okay, an older one. Interesting. So if you're watching on CoinDesk TV or YouTube, you'll see it, but they have a older model.
That could be an M50 or an M60.
Yeah. Anyways, this story goes on to talk about how this Japanese energy company has been working with Bitcoin mining since 2018. First came to light recently. They essentially had excess energy from green energy sources, and they're like, hey, we don't want to waste this. So they started looking into Bitcoin mining. They went through the throes of the 2019 and 2020 Bitcoin mining bear market and have come out on the other side. And for whatever reason, this is just being published now, and it caught a few people's eye. I think the thing that, for me, reading this piece resonated the most was the fact that people are trying to link the excess energy in Bitcoin mining versus the wasted energy in Bitcoin mining, where most journalists are like, Bitcoin mining is using energy that could be used for end consumers, but actual energy companies are like, hey, no, this is a great way to monetize wasted energy. And so they go on in this piece to talk about the gigawatts of power during the year that are just wasted because there's not demand during the day, and you have to have a match of supply and demand for energy. Otherwise, you have problems with frequencies, which will cause blackouts. So this is a nice little piece, and I think the fact that it was international also caught some people's eyes because the demand response stories, the energy waste stories are typically just kind of found in North America. But any takeaways for you, Colin?
Not too many, other than it seems like the Japanese are just always kind of creeping in the background of the Bitcoin mining industry. And this shows a huge gulf, I think, as always, between East and West with regards to the information that gets through. SBI has a mining pool. I would imagine that TEPCO is probably on that mining pool. Maybe that's why we saw a 2 exahash bump in their hash rate for the SBI crypto mining pool back in May. GMO is a Japanese internet company that's also been involved in Bitcoin. And I think probably maybe one of the takeaways from this, I can share my screen really quickly, is that the TEPCO stock is up 31% over the last month. Now, granted, it's an extremely volatile stock. I mean, look at the way that it's bouncing around. I'm not.
That's funny, though.
Sorry, go ahead.
Yeah, it's pretty volatile, but that is funny that you noticed that.
Yeah, I mean, I would have to imagine that the bidding up on this probably has something to do with what we just saw with that announcement. That being said, I'm not a gigabrain when it comes to financial analysis. Maybe all of that volatility has to do with the Japanese yen carry trade that's been going on after the Japanese central bank raised rates, like I think like a fraction of a percent. Maybe it's just because it's a smaller cap, equity. I think it's got like $7 billion market cap. So anyway, interesting nonetheless. I'd be really curious to see how much hash rate they're actually operating. I'm going to go into their public filings later if I can find them and see if I can get some information on that. So if you're reading this or if you're listening to this, be on the lookout for some tweets potentially from me or the Mining Pod account if I find anything. Would like to do a little more digging into that, because that was the one thing that was missing from the reporting on this to me, is like, how much are they actually operating? Is this like a little pilot program? Are they balls deep in this? I would like to know more.
Yeah, they have some numbers in here, which are just all simulations. It says Agile Energy Exit simulations based on open data show that 240,000 gigawatt hours of power would be wasted if green energy were to be introduced to account for 50% of the total power supply of the energy produced by this specific Japanese company. The simulations also showed that using 10% of that power would allow 360 billion yen or $2.5 billion worth of Bitcoins to be mined every year. So basically, there's backing out like how much energy or green energy is produced, how much is wasted, and how much Bitcoin get that mined. Now, of course, we know there's difficulty. There's actually getting Bitcoin miners onto racks, all that sort of stuff. $2.5 billion worth of Bitcoin is,
and that's just, that sounds like, a lot of the, forward projections that we've seen with almost anything.
Yeah.
And, you know what I mean? Companies are always extrapolating based on, what they're currently making and then applying the best case to that. So definitely worth taking that with a big old grain of salt.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
We're going to move over to talk about Fractal Bitcoin. So we put this piece up yesterday. We kind of did a special issue of the Block Space newsletter. So for those who...
Do you want me to share my screen for it?
Oh, I got you.
Okay.
Already ahead of the game. But for those of you who are paying attention to what we're doing at Block Space, we have a few different publications, or I'd say like content creators under the umbrella. Mining Pod being one, and the Bitcoin Season 2 being another. And so this kind of fits into the Bitcoin Season 2. So we have this headline: Fractal Bitcoin blockchain size could hit 1 terabyte by the end of 2024. Colin, I'll let you explain Fractal Bitcoin, but I think for Bitcoin miners, this matters because we're seeing yet another meta protocol adjacent to Bitcoin that is impacting potential fee revenue for Bitcoin miners.
So for our listeners and readers who are tired of us talking about Fractal Bitcoin, I apologize, but we are a niche industry publication and we are going to try to corner the market on stuff like this because, quite frankly, we just don't see people doing many deep dives into these new layer twos and how they can, what implications they have for Bitcoin. So for those who don't know, the TLDR on Fractal Bitcoin, it's a merge mine sidechain. Merge mining occurs when Bitcoin miners can point hash rate simultaneously at two different chains. Most commonly, this is done with things like Litecoin or Dogecoin, for instance. There are also, one of the first merge mine sidechains was Rootstock. So Bitcoin miners operate their hash rate and they produce blocks for both networks simultaneously without having to choose one or the other. Potentially a big revenue boost for them so far. Not too terribly much revenue, but still worth it, right? It's a low lift thing for them to do. And for Fractal Bitcoin specifically, it has a weird mining system called cadence mining. And we'll get into this a little bit more later as I go through this article. But a third of the blocks for Fractal Bitcoin are produced by Bitcoin miners who are merge mining, and then 2/3 of the blocks are produced by Fractal Bitcoin miners only. Now, I know that that's probably breaking some people's brains. It seems convoluted. It's convoluted to me, but they have different difficulty adjustments and targets for both miners. So that was my first question: is how do you make sure that one, contingent, i.e., the merge miners, which are a much larger portion of Fractal Bitcoin's hash rate, how do you make sure they don't override the entire network? And that's the reason why they can't, because there's a tiered system. Currently, there's about a third of Bitcoin's network mining Fractal Bitcoin. It's like 250 exahashes when we wrote this article, out of roughly 650 exahashes that are currently active. But as the token price has gone up, we've seen the share of Fractal only mining go up in tandem. And that would make sense, right? Game theory would suggest that as Fractal Bitcoin, the token, becomes more valuable, more people are going to solo mine it because they can make more money from that, right? Last point to make on this is that Fractal Bitcoin is a product of the Unisat team. The Unisat team comes to us from the region of Bitcoin which must not be named, the Bitcoin Satoshi's Vision ecosystem. A lot of Bitcoiners and Bitcoin maximalists have strong opinions about BSV. I probably share a lot of those opinions, but this is important for understanding Fractal Bitcoin's vision. They have 30-second block times. They have the same data limit for per blocks as Bitcoin does, but they're trying to go for, more throughput, right? So maybe the blocks aren't as big as BSV, but they're looking for more throughput on the sidechain. And this is kind of the angle that we took for the last newsletter. Actually, Will, if you could pull it back up really quickly and go to the chain size chart. When we wrote this, Fractal Bitcoin's chain was roughly 15 gigabytes. That was yesterday. That's only after 72 hours of being active. If we extrapolate its rate of growth, which admittedly is maybe too bullish in terms of how much use it's going to get, because right now it's hot, might not get this much use going forward. But if we were to extrapolate the current rate of growth, the chain would hit 1.2 terabytes by the end of this year. Now, for perspective, Bitcoin's chain is 600 gigabytes currently, and that's after 15 years of operations. So this chain is going to get obese very quickly, and it's going to be unwieldy. It's going to be impossible for people to run a node locally in a few years, and you're probably going to see the same level of centralization that we've seen with BSV. Now, the good news is this is a side chain. It is completely separate from Bitcoin. So if they want to do degen experimentation, go for it. But it's worth caveating that whatever this whatever it's going to turn into, it's probably going to be massively centralized.
Really good overview there. Let's go into some of the mining numbers here. So you mentioned it, but there's a lot of different mining pools now merge mining this, about 250 exahash. So it's 30% of the Bitcoin network by hash rate. And then for context there, you had Rootstock, which is another merge mining scheme, and it's around 60% of overall hash rate is merge mining it. So for merge mining, you're just including a little bit more data within your blocks, some sort of thing in the op return or elsewhere. It kind of makes a note to another adjacent protocol that, hey, we are here and you are confirming this, and it has some sort of security tie-ins. Now, we don't need to go into the merits of merge mining at all. The other thing I want to bring up was just talking about the cloud mining contracts that are actually going a little bit crazy right now. So we talked to NiceHash, Marco Tarman, and he gave us a little quote saying the pay rate on NiceHash often decouples from hash price. Of course, hash price is just a measurement of revenue from mining. Typically, NiceHash hash rate is 1 to 2% more, and they're able to do this because they have a algo that allows them to swap between different chains. There's different boosting mechanisms to get a little bit more revenue. But right now they've seen things jump from about $40 per petahash per day to about $87 per petahash per day in terms of hash price. And so that's a significant jump at a time where bear market mining is taking people out. And so I think the takeaway here is if you're a smart miner and you're small and you don't really know how to keep the margins going, pay attention to some of these meta protocols because they might help you out with revenue if you know how to do it. And oftentimes it's as simple as just swapping your stratum and pointing your Bitcoin mining pool somewhere else. Sometimes it's a little bit more involved, But I think for me, the takeaway is just pay attention to these meta protocols and what we're often writing up a block space, because, doubling your revenue when a lot of miners are going out of commission because of the bear market, it's kind of nice. Kind of nice. Any final thoughts on this piece?
No, I think that kind of covers it all. A lot of moving parts here. It's been pretty interesting to see how this touches multiple different, areas of the ecosystem.
Definitely. Okay, last piece, and we're actually going to go back to BSV. So we have the Cry Corner, and I'm just going to hand this basically over to you in a second. I'll give you like a little teaser intro. But for those of you who pay attention to the broader discourse on twitter.com, you'll know about Martyr Made. It's a history podcast from, it seems like kind of homespun guy. He just blew up recently. He was on the Tucker Carlson podcast talking about Churchill and the legacy of World War II. He blew up on political Twitter, and now he's kind of crossed his way into Bitcoin Twitter by wanting to make his podcast time immemorial accessible to all via the blockchain. But he made a funny mistake in choosing his blockchain of choice. So I'll give it to you.
Yeah, so this was a legendary crossover for me. I never thought that, World War II history and Bitcoin would somehow find themselves in dialogue with each other, but that's exactly what's happened. So yeah, Darryl Cooper went on Tucker Carlson. He made some provocative statements that Churchill was the chief antagonist of World War II. Whether or not you agree with that is not the point of this podcast. Certainly was fodder for debate online. But after that, he got a lot of pushback, and he decided to then upload his podcast onto the BSV blockchain, and he thought it was Bitcoin. So what's funny about this to me is not only is BSV kind of, an alternative history of Bitcoin, it's almost revisionist history in its own right. But what we also have with this is, Darryl Cooper is just completely misunderstood that this is not going to actually preserve it if anything were to come to shove, because BSV is extremely centralized. No one's running these nodes by themselves, right? They're all on cloud servers. There's probably maybe just a couple currently running. So this will not offer him the kind of censorship resistant, permissionless guarantees that he thinks he's getting.
Yeah. I mean, this is something that we've talked about on the mining pod over the last few years is mining like this way of bring permanence to information, or is mining this process of moving transactions and bring security to the Bitcoin blockchain? And most people don't really care about the permanence besides their transactions. They don't care about the permanence of data necessarily. There's a few examples within Bitcoin history. It's like using op return for like wedding notices, or there's like scripture like Luke Dash Jr. used to do. And then of course, with the advent of ordinals, being able to put data into certain parts of the Bitcoin blockchain is important. But these sort of like larger pieces where people are trying to store entire libraries of podcasts or videos, it's always been an interest for people who don't know cryptocurrency or outside of cryptocurrency. It seems to be something that people get really fixated on. And then when there's protocols built around specifically to do this, the economics never make sense. They never work. And there's always problems with it. But people come back to Bitcoin and want it to happen. And I think that's where ordinals and NFTs have made a splash. But I did like this story because there's a nice crossover with modern media, with this podcast being a big deal. Yep. And then our favorite joke chain, BSV.
Good recap.
Not much of a cry corner besides this guy just being confused.
Honestly, the crying really came from the people pushing back on him. And then the crying then came from people trying to tell him that that's not really Bitcoin. I DM'd him and was trying to be like, you don't have no idea what the can of worms you just opened up. But no response yet.
Yeah, no, there's something there. Okay, we'll close out. Before we do so, though, I want to push everyone to go check out opnext.dev. It's opnext.dev. It's our first tech conference, first Bitcoin scaling conference hosted by Blockspace Media. That'll be at November 9th at the Fidelity Center in Boston. We have an awesome lineup, and we're working on getting a lot of Bitcoin mining content there, specifically around soft forks, activation, and I'd say stuff outside of typical transactions. So we'll have Portland Hodler, who infamously made a lot of stuff with Marathon Slipstream. We'll have some attendees from different pools there and some other public miners in attendance as well to learn about Bitcoin scaling. And of course, we're going to have a lot of people from Bitcoin Core / Bitcoin Core adjacent projects as well. So if you're interested in learning more about Bitcoin scaling, go check out opnext.dev. You can buy a ticket or just set aside November 9th. It's a Saturday for our live stream. Colin, you got any weekend plans?
Yes, sir. Going up to the beautiful city of Portland to visit an old college buddy. So
nice.
If you're a praying person, pray for me. Make sure I don't get shanked on the side of the road. That's a terrible thing to say, but
keep your head on a swivel.
Yeah, keep my head on a swivel.
We need you.
Sure.
We just got you on board here, man. We can't have you depart that quickly.
Losing me to the tent camps underneath underpasses.
Well, cool. Okay, we will see you guys next week. We have an awesome interview on Tuesday with Checksum, aka Ian from Power, talking about S21s and other units. And then we got some great content lined up in October. See you guys next week.
Have a good weekend, y'all.